Hi students, today we're going to talk about AI in finance. So we hear a lot about artificial intelligence, but for finance students or finance major, what does that mean to us? So this is the only and the analysis in the world about AI in finance, and I'm excited to share it with you. My name is Joseph Bonaparte, associate professor in finance, and I'm a director for external affairs. And also I do consulting to institutional investment companies. So before we go talking about AI in finance, let's look how that relates to finance. Well, the revenue from the AI is going to reach in about a decade from now about $2.74 trillion, $2.7 trillion. This is a lot of money. The current revenue from AI technology, 129 billion, which is a lot now, but we expect to grow 36% annual growth, compounding annual growth, which is going to be at 2.74 by 23. If you look to the projected AI revenue by market share, as of now, most of the revenue is in the service, 52%, but expected to be in 2033. 75%. The hardware is going to go from 19 to 12. That has implication in NVDA because NVDA is a hardware company. So it's still growing, but less than the service. And then the software will be 28.6, and then it's going to go down to 23. Now, so the hardware will grow, the software will grow, but the service will grow faster than those. The revenue growth in the service, that makes it more revenue here. But it will be revenue here more and growth here, also growth here. If you look at the AI revenue by sector, you're going to see the healthcare has the biggest sector, 52% of the, and now expected 2033 to be a 66% of the revenue in the healthcare. Manufacturers is 29, it's going to go up a little bit. And then the other sector is pretty much the same. So basically, the healthcare will be growing faster. The AI healthcare sector will be benefited a lot from AI technology. Here, revenue market share by region. The United States, as of now, about 47. We expect to go to 71. And that's normal about the United States because if there is an European companies or Asian or African, most likely American companies will buy them and they bring them here. Now, again, why we have poverty in Africa? Why we have poverty in the Middle East? Because there is no technology here. Middle East 1.1. Latin America is better, but Africa is not here. So again, every new technology, more wealth inequality. Africa is poorer and the West is richer. So what are the key questions in AI in finance? What is AI in finance? Why the innovation? What are the leading AI companies, ETF? How to evaluate AI company and fund? And key AI challenges and what is the future for AI? What is AI in finance? It's like how the technology service couple sectors like investment services. The impact of AI in finance, it's in banking, it's in data, managing data, cost-effective cybersecurity protection. How does AI impact the finance sector, security, regulation, return, revenue for companies that provide AI-related products like software, hardware, service? And we talked about that in a few minutes ago. How does AI impact the financial valuation? Perform real-time calculation to forecast performance, detect anomalous spending behavior. Like, for example, you know the January effect, we know this and that effect, but we didn't. There's a lot of other anomalies. We didn't know it, and we expect the AI technology to help us to reach to these anomalies. Advantage of AI, the rise of the online banking, shift from virtual to virtual. From in-person. Now we're getting closer to how to evaluate a company in finance. But before we go there, we have to understand type of financial data for AI analysts. Fundamental data, which is balance sheet, income statement, market data like price, yield, implied volatility, volume. Analytics, analytics, like analyst recommendation, credit rating, forecast, and projection. And then alternative data like images, metadata, Google Trend and searches, and Twitter chart. That's what we're going to do today. We're going to focus on this when we evaluate companies. So AI in finance has two dimensions: financial operation and statistical learning. In the financial operation, trades automatic via AILL, like auto trading, robocall, all of those. AI in finance, statistical learning, like authorizing loans, making investment, rating a bond. I'm gonna go, what are the benefits of AI in financial services? It allows organization to fast track and automate historically a manual and time task like market share. What are the benefits of AI in finance? Obviously, cost effectiveness, payment, deposit and transfer, customer service request, handling application process, credit card and loans. You didn't need to drive to the branch, and you can do it there. So it's amazing. It's easy in so you have a financial service, household, and then ease the interaction between the two. AI in behavioral finance, and we talk about machines and cognitive functions. So for example, if you want to make a fast decision, you have in short time, so AI can help you, and AI can project what somebody might think or what somebody might believe could be the decision that they make. The top AI ETF like indexes. The biggest one are here, the top 6 based on US news. Global X, that's a ticker, expense ratio 0.68%, very, very cheap. The cheapest one is iShare Exponential Technology. So these are ETFs, you can buy them. It's like an index that include a couple AI companies. How to analyze AI ETF? You have to look at the ticker, how much performance in the past 5 years, 1 year, the beta, and what companies own this ETF. For example, you want to have a higher return in the past 5 years, also higher return in the past year, but mostly 5 years. And you want this ETF to be owned by a big corporations like Meta, which is Facebook, NVDA, Microsoft, and others. Top AI companies based on US news: Microsoft, Alphabet, NVIDIA. So we're going to use these 3, and then TSM, Meta, ASML, SAP, and Reflex, and those. Here I explain for every company why we believe it's a top AI company. Now, this is pretty much intro to what are the core of our presentation, which is how to evaluate AI stock. Now, how to evaluate ETF, as I said, you go to 5 years yield, you see the beta, you want to have a higher yield, lower beta, and top holders are to be big corporation. Now, how to evaluate a company, that's a different thing. There's a fundamental and behavioral. Fundamentals, you use a PE ratio, current and the future, and then you do the R&D, research and development ratio, relative R&D impact and revenue growth. So PE ratio, suppose the company, we take NVIDIA, the price of NVIDIA as of today, 400, the current PE ratio, it's 200, the future PE 150, that means the price is going to go up to 533. So what's a PE ratio? Just if you didn't know about it, PE ratio is a price earning, which means how much investors price every dollar of earning. So if NVIDIA 200, the PE ratio, that means investors are willing to pay $200 for every dollar income or revenue or grow income for NVIDIA. Now, for other companies like banks, they put $9. So why for $1 bank or JP Morgan, they pay only $9 PE ratio, but for this company, NVIDIA, for $1 income, they pay $200 price. The reason is because the growth, they think NVIDIA is going to grow faster with the AI technology. So yeah, $1 of JP Morgan price for PE ratio is 9, but $1 of NVIDIA price for 200 because they think the $1 for NVIDIA is going to grow faster. So yeah, so if you have a current price, current PE, the future PE 150, then, and all of this data is available in Bloomberg. Then the future price for NVIDIA will be 533, could be a buy. Why could be? Because if the S&P give you better performance, then you buy the S&P. But I think this is explosive performance. PE ratio, if the PE ratio forward, if the PE future is higher than the current, then the price is going to go down to 320. For example, if it's suppose 250, then that means it's too expensive, the share, and the price should go down to 320. The second model is revenue growth sensitivity to R&D. To investment, you regress revenue growth equal a constant plus alpha times revenue growth for S&P plus beta multiplied by R&D at time t. Notice here, we looked at the revenue growth at time t plus 1, and here R&D at time t. And then you regress this model, and you get some inference. If beta, which matters this here, if beta greater than 0, then at statistically significant, then R&D greatly support the revenue growth. In fact, the higher the beta, the more innovative is the company. So for every dollar you put R&D, if that impact your growth, future growth, if it's positive, that's great, and that's what's supposed to be. If it's 0, that means you invest in R&D, but in the wrong place. You do R&D, research and development, but doesn't help the company. And we saw that with the Meta, which is Facebook, when they try to invest in metaverse, they invest a lot of money, but they did not change their revenue. Now they cancel it. They cancel the investment. So now we're going to go to the second part, which is, it's going to be related to your homework also. AI stock valuation based on behavior. We use correlation between Google Trend Index and use several technological terms as follow: AI, CNN, actually NN, neural network. If you use conventional neural network, that would be CNN, large language, LLM, ML, machine learning, Gen AI, generative AI, and deep learning, DL. So we went to Google and searched for every term, and I'm going to show you one of how I do it. So you go to Google Trend. Here. And you say artificial intelligence, here we go. And you say, I want to have in the since 2004, United States, and you download that. Then you get the search for this term by month. Now, from the figure, you can see that this technology was not well spoke, but recently started getting some interest. So we will focus only in the last 12 months because this technology is very recent, very, very recent. These are the numbers we're gonna use. So I did that here actually, and you will have this Excel file also. I did for every term: artificial intelligence, neuroscience, neural network, large language, machine learning, deep learning, and generative AI. So I did that for every term, and here is the sum, and here is the mean by month. And then I created the return for 3 companies, NVIDIA, Microsoft, and Google. I looked at the return and then report the correlation between NVIDIA and every term. Here, correlation between NVIDIA and every term. Correlation with Microsoft with every term, and correlation with Google with every term. So that's a correlation here. So in this table, I reported also the correlation, correlation here for every company by the term. And then I created a weight, which is 683 divided by 3,904. That will be 17.5. 697 divided by 3,904. 17. So this is a matrix I created based on this data about the sentiment index. So from this information, I get the sum and then the weighted sum, and this is the matrix. So I multiply the weight. I multiply the weight of every term with the return correlation, and got for NVIDIA's 32%, the index, AI index, AI in finance index, Microsoft, the index 51.7 and 47.4 for Google. Obviously, the highest index ratio is the highest AI finance index is Microsoft, is the top AI company at 51.7. All right, so here what I did, I looked at the sum of how many searches in Google Trend, how much you mean, and then I looked at the correlation between NVIDIA and the term, 35% for artificial intelligence, NVIDIA return and neural network in that month. So this is a correlation between NVIDIA return and the number of searches by month of artificial intelligence. This is a correlation between NVIDIA return and market neural network. So I have for every company, I have the correlation between the return and the term, and I use the weight that I did here to get the ranking of the company, 32 for NVIDIA. I did the same for Microsoft. For Microsoft, the correlation between artificial intelligence and Microsoft return, and I got that. And the same with Google, and then I calculated the average, and I found from these three, the average for these three companies is 43.9%. This is the correlation multiplied by the weight. And then I got correlation of this term, and I got the index, which is the sum, weighted average is sum of this. Okay. As for NVIDIA, 32, Microsoft is the best at 51. Let's go back to the slides and your homework. So we get that. Next step is AI sentiment and it can movement with the stock returns. So I did that. How much NVIDIA can move with the Google trend, and then AI and finance index, and AI example that I wanted to do. Now, I did in the video, I did that for all companies. The weight should be for these terms, 17.5 to give weight for artificial intelligence, machine learning 26, neural network 17.9. So this is the weight that you need to do. So for your homework, you need to pick a company. Let's assume I'm going to do it for you. You will have this Excel. You will have this Excel. And then I did for you the Google Trend search for artificial intelligence, neural network. So if you go to Google and you put neural network, search it, and then you got United States, this. So if you download that, so you get the searches. We only focus on the last year. So I did for you all of those. I calculated for you the Google trend for every one of those. And also I create for you the matrix that always you're going to use the same matrix for any stock. The same matrix. All what you need is to calculate the correlation. You're going to take example like Amazon or Apple. Let me use Apple, AAPL. So this is, I want you to pick a company, not NVIDIA, not Microsoft, not Google, different company. For example, Apple. Go to Yahoo Finance and do company AAPL. Choose a different company. I use Apple. You can use Amazon, Tesla, any company if you're interested. Go there and go to historical data and go to monthly and do 5 years. That's fine. And then download and then open it. and then calculate the return. Return is equal to, open parenthesis, the price end of the month minus the price beginning of the month divided by the price beginning of the month, enter. Return, double click. Now we care about the last 12 months. This one we don't need it. We care about the return from June 22 till May 23. June 22. Sorry. We care, oh yeah, June 22. So we care about this till May. Right click, copy. You go to the Excel that I will provide you this Excel. Right click, values, paste as values. And now look how much I'm gonna do it, how easy. I'm gonna do that here. So now we got the correlation. But we need actually this. We calculate the correlation. Correlation. Correl between this it's right, not right. No, I'm gonna do it right. Here. Correlation for AIPL. And this is gonna be this is maybe the correlation between artificial intelligence and Apple. Enter. And then you do the rest here. So given Apple, so I can do insert. I can write here Apple AAPL. AAPL. And then the correlation here. Need to report the correlation here. Correlation between Apple and artificial intelligence is this. This equal this. The correlation between Apple return and neural network, it's equal this, equal this. The correlation between Apple and large language is this, so equal this. The correlation between Apple and machine learning is this, equal this, equal Apple and generative this, equal Apple and deep AI is this, enter. And then you got everything you need right here, and then Apple and the sum will be equal to this. Now all you have to do is to multiply the correlation of Apple, multiply by the weight, enter. And then the sum will be here. And now notice, Apple is not very advanced. The first time, it's a surprise to people, but Apple is not very advanced in the, I'm gonna put it here in the light blue, relative to Microsoft. Microsoft is more advanced index for AI. So what you need your homework to do is to pick a company, calculate the return for this company using Yahoo Finance. I did that. Then go here, to create a correlation matrix, report these correlations here, and then calculate the number, and the number here is 13.3. So for your exercise here, your homework is you use this weight 17.5, 17. So this is given to you. All what you need to calculate is the correlation between Apple return and the Google trend sentiment. and then report the 13.3. So basically, if you go here, pick a company, the AI NFX is the weighted sum of all the correlation metrics, which is the last row. For Apple, AAPL company, we find it is 13.3%, which is much less than Microsoft, which is a leader one. So here's in yellow. So all what you need to do is to pick a company, use this weight, calculate the correlation between the return of this company by creating this here. So for example, if you use a different company, like for example, Tesla, historical data, monthly, 5 years, download, open. And it's equal. The price end of the month minus the price at the beginning of the month divided by the price given in advance. And you do double click here, drag it down or double click. And then you take the last 12 months, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Copy. You go to this Excel file, which is I have, you will have it, right click, put it here. You do Tesla, TSLA, and that will be the correlation for Tesla in this case. And then this number is already coming here. Tesla, which is the correlation between this and Tesla, 29.46. Using the weight, and then the Tesla index will be negative 13.5. So Tesla's way far from AI. So the highest Microsoft at 551.7. Some companies like Apple 13. Tesla is in the negative 13.5. So your homework, pick a company, put the return here and report this number here. I hope you understand the assignment and you enjoy the AI in finance. Thank you so much and have a great day.